I have been discussing the April 2nd, quote unquote, doomsday, where so many people are so afraid of this April 2nd date, because this is supposedly the date in which case the idea is that Trump is going to impose retaliatory tariffs on lots of different nations. Now, the reason I say that's quote unquote doomsday is because a lot of the news headlines are pointing to this April 2nd as like the end of the world, that the stock market's going to crash. But what we see in markets, and I have been slamming my fist on the table with this concept because everybody seems to be ignoring this. The put to call ratio screams, that this market is all bearish, right? So many people are so scared. Everybody is concerned that this is going to be the day. Everybody's eye is focused over here, but you can't look where everybody else is looking, right? Everybody's so focused on that April 2nd date. Meanwhile, what's the market doing? The market's showing you signs that it's trying to bottom out. Is that a guarantee that it goes higher? No. But I've said this for the last week or so. I think the low is already in for the S&P 500, at least for the foreseeable future. Like for the next few weeks, I would be surprised if this market tanks through the lows. Could it happen? Of course it can. I'm not a crystal ball fortune teller, but my probability thinking, right, my educated guess is that we've bottomed out. And I've been saying that since over here. Like, I really think that we have started to bottom out, because what the market often does is it looks at these big events and it sells off first, right? It says, oh my gosh, that is the end of the world over there. We need to sell now, sell, right? That's what it does. And then what happens is that as the date gets closer, the worst case fears that everybody was fearing over here don't seem to be coming to fruition. On Friday, Trump mentioned the word flexibility. He mentioned flexibility on some specific tariffs. He was pressed in a conference about, the upcoming deadline, and he said there would be some flexibility. Any kind of quote unquote flexibility or resolution, this market is going to cheer, because if there's flexibility, it's not going to be the worst case scenario that everybody has feared. Again, I am pounding my fist on the table with this because it's something that happens over and over in markets. People get so scared and they sell everything, and that can leave opportunities to buy that fear. So that is why I am looking for more upside on the S&P 500 and the NASDAQ. I've been buying stock shares. I'm looking for a long position on the NAS and the S&P 500. And I think that most likely the market is bottoming at this time. Again, that's not a widely held belief. Everybody I watched this weekend in the market seems to be pretty bearish, saying, this is going to come up, put in some kind of lower high, and we're going to go take out those lows and continue. And maybe we do. But at least until that April 2nd date, maybe that is the day that we start to see the market actually start to go down. But I think that we've bottomed for the short term. And that's why I'm looking to take a potential trade. I think the risk reward still looks really good for the bulls. Nick, you're in an EG sell, right? Yes, I have a dollar cost averaging short position on Euro Pound. It is really boring. I have a tiny position. I've sold 1, 2, 3 different times. I'm looking to close out for a small profit soon because I don't love the trade as much as I did. There's not too much commentary there. It's a choppy range bound chart. I sold a little bit, sold a little bit, sold a little bit, and I'm looking to close out pretty soon. So what's more interesting is I have a silver position on right now. So I went long silver this past week, pulled back to this level, been watching this level for some time, tagged it, I went long. Edge Finder confirmation was there. We do still have silver bullish ratings here, gold bullish ratings here as well. Euro and pound are also on the watch list. So I'm watching silver here closely because I think that we may have also been pulling back here on the metals. Gold still has potentially some room to pull back. I did end up getting taken out for a profit on my gold trade on Friday. I'm not as interested in riding gold here. I actually think that there could be a little bit of a catch-up trade for silver here. Though if gold gives me a larger pullback this week, if we do see metals lower this week, I'm actually really interested in potentially establishing another long position on gold. Definitely going to watch that going forward.
Market analysis, free trading courses, Edge Finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
So watching gold, I think that it's likely to continue higher. I wouldn't be surprised if we just shot off into the sky, but from a bullish perspective, I would like to see if it can come down and give me a little bit better of a risk reward profile by pulling back into a key level of support. So I like gold quite a bit. I also like silver. Like I said, long silver. I have a stop below this structure. If we fail out here, if we start rolling over and metals see a bigger kind of correction, then I'm just going to stop out on silver and move on. It's not a huge position for me, but it is a trade that I'm watching close, and it looks decently good out of the gate here this week, up about 0.6% for silver. Off the daily chart, this looks really healthy, so I like this. I like this trade quite a bit. Again, key thing here is confirmation from the Edge Finder, and one thing I've got to point out is that the Nasdaq is getting a bullish rating here on Edge Finder. COT data came in real strong for institutional positioning, right? We saw big accumulation. We can actually pull that up. Let's take a look at our institutional positioning here to see what big money was up to. You can actually see they bought gold, they bought Nasdaq, Kiwi, Euro, South African Rand. On the sell side, US dollar, Aussie dollar, the Nikkei, 10-year treasuries, silver, Russell, sold little Swiss franc and Dow, and the Japanese yen. So that's your institutional positioning. COT data showing us just kind of the flow, the latest flow of money in and out of key charts that we all watch, right? So a little bit of accumulation in gold in the NASDAQ. So I am really interested in the NASDAQ. I already have a good bit of tech exposure here. Like I have a list of stocks here. You can actually see my positions. I'll show you. This is what I'm in right now. I bought a whole bunch of stuff, but if you notice the key thing here about what I bought, most of it is pretty risk on tech-centric NASDAQ stuff. So I bought things like Fortinet, PayPal, Uber, Airbnb, Nvidia, Google, Tesla, Amazon, Salesforce, Home Depot, and Intuitive Surgical. IGV is a trade for me. This is a software ETF. So if I do IGV, this is the sector ETF for software. I took this off of a weekly chart level. Huge level of support got tagged here, and I went long. This is definitely more of a position trade for me because this is, my stop loss is pretty wide. I do think I might trail that stop. If we get a nice breakaway move here, I'm probably going to trail that stop or just trim it to reduce risk on the position. In fact, I might actually do that today. But we've got a nice profit on this one. I'd like to see this thing continue to move higher. But yeah, software, good position for me. Nvidia, I'm back to break even after all this time. Man, this is just crazy. Nvidia has gone sideways for a good chunk of the last, year. But I was able to scoop up some more positions, averaging down here on my position in Nvidia. So again, looking really strong out of the gate here for the NASDAQ. Let's see how this week progresses. Let's see how today's candle looks, but I may actually drop down lower time frame, maybe look at the 4-hour chart and see if I can get a trade entry today on the NASDAQ, but looking really sharp, looking strong, like I said, out of the gate. Got Bitcoin up here a little bit. How's our Euro US dollar? Somebody pointed out that it's not quite there, man. I want to be long the euro against the dollar. I want to be long the pound against the dollar, but I'm trying to just hold my, sit on my hands for a little bit longer here. See if I can get just one more flush down, right? Just to give me some confirmation, right? I illustrated this in my weekend video, the Sunday video, right? That I'd like a break through those structure, bounce back, any kind of sign like this, I'm probably going to go long the euro. We have Edge Finder confirmation on this, right? If you're like, man, I really struggle with fundamentals because they're challenging. They're a lot to learn. There's a big learning curve to this. Great. Check out the economic heat map, which simplifies the whole process of fundamentals. If you're like, I don't really understand manufacturing PMIs. Okay, great. I got a video for you on that, but also I've got a surprise index and an impact on US stocks and US dollar to help you understand what that PMI actually means for the markets. We then summarize it to make it easy to understand how economic data is falling and what that means for you as a trader. You as a trader, right? I'm a trader, you're a trader. This thing is truly built by traders for traders. I want to know, without having to go through 17 articles today, what the US economy is looking like so that I can make better informed decisions about gold, so I can trade currencies better, so I can trade indices better. I got to have that data mapped out in front of me in a simple view. I don't have time to go put all this in a spreadsheet and journal this all manually. Heck no, right? I got trades to find. So showcase the data for me in a way that I can easily understand without having to pick apart and do a full research paper just to understand the state of the economy. All right, numbers should be coming out here momentarily. Initial reaction here is not too much in either direction. Gold is slightly lower, dollar slightly higher, stocks mixed. Okay, so manufacturing came in a little bit soft, but services upbeat. And this is what you want to pay attention to, is really the services, because I know that we want to do a lot of manufacturing onshoring here in the United States. That's a theme this year, but manufacturing is still a small component of the US economy at this time in relation to services. Services is the big one, and we see some nice upbeat expectations for forward-looking indications of the services part of the economy. So that's a positive figure. Now, overall, you can see stocks are higher here overall. Dollar index strong because, again, at the end of the day, strong services PMIs are going to trump manufacturing PMIs because, again, it is such a core component to our economy. So think about this, guys. The U.S. economy is not really, I know Trump and team want to bring more manufacturing back to the United States, but that's not here and now the majority of what we do. We build technology companies, we do software companies, right? We're a services-based economy, banking, all the things that US does big time. And those parts of the economy are signaling some forward-looking strength according to our services PMI data. 54.3 compared to 51.2 expected. I mean, that shows some upbeat forecasts for services. Manufacturing missed a little bit, but as we were just discussing before you joined, Ivan, the U.S. economy mostly is based around services. So it's the larger piece of the puzzle, if you will, showing some upbeat strength. And yeah, dollar's looking strong. Where does this set us up for this week? Are you looking at dollar long positions? Do you already have any dollar long positions?
Yeah, I don't. But yeah, I'm looking for dollar bullish. The only reason for that is we can't be bearish for the entire time of the year. You have to have something going on out there. I don't know why I became southern all of a sudden. But yeah, I'm looking for New Zealand dollar short. More like the 57.80 level-ish. So we are a bit like, I don't know, 50 pips away from that. So yeah.
Gotcha. So you were looking for the dollar index come down a little bit, potentially giving you that entry on Kiwi dollar shorts. Got it. Any other ones? Are you looking at euro at all? What do you? That's one I want to ask you about. What about the euro and the pound? Are you interested? Would you short those against the dollar or not so much?
Are you nuts? Like, are you crazy? Like pound? No, pound has been showing a lot of strength because they have inflation at about 3%. Is growing. Yep. They have a bit of a growing economy more than Europe. Europe, to me, is, well, they had the increase of 800 billion euros into spending. So those are probably my worst ones that I would ever take because they have a lot of pump. And I don't know if it's pump or dump, but at least a pump of money into it, so that should strengthen them going forward.
Well, that's what I was going to ask you about, Ivan. Or that's why I asked you that, is because those two currencies specifically seem to kind of be having a bit of a revival in strength that they haven't seen in some time. Big government spending on military contracts and flooding into the, anytime you have a bunch of money flooding into the system, it typically, or the idea is that it could cause some stimulus to the underlying economies. So yeah, I like your idea. Like if you were going to be dollar bullish, this is the cool thing about Forex is you can select which currency versus which currency. So if you like the dollar, well, you have the choice now to go, well, maybe I want to go long dollar against the Japanese yen or the Canadian dollar or the Australian dollar. You have these choices. So you like Kiwi specifically. What about Kiwi do you think is more bearish? Do you think their central bank is a bit dovish, or is it the commodity currency concept? What are you thinking?
Just negative growth. I think it is. Is it 3 months, 3 quarters in a row now? Inflation is about 2.2%. Business confidence and consumer confidence is pretty horrible at the moment. So it's just a general state of the economy, to be honest with you. China, if China does well, that would send the New Zealand, Australian higher. But I guess I'm betting that China is going to have a horrible time at the office with the trade wars.
That's a good point too. You know, you can't. The thing about the Australian dollar and the Kiwi dollar, for those who are maybe less familiar with this, is that they are huge trade partners. Well, they're very commodity-centric economies. These parts of the world, they export a whole lot of raw materials. In fact, that's like the bulk of the Australian economy. I think it's the same with New Zealand. They have very similar kind of economies. But the point there that you just made, Ivan, for those not familiar, is that if there's a slowdown in China or a boom in China, these currencies, there's some correlation there, because a strong China typically means a stronger Australian dollar because they experience a lot of growth from the high demand of raw materials, which they provide. And conversely, if there's tariff troubles and China struggles, then we may actually see the demand for these currencies wane a little bit. So good points to think about. You know, here's another question for you, Ivan. I think this is the topic of the week, really. I mean, we saw Jerome Powell speak a little soft on tariffs last week. We saw him not too worried about the inflation side of the mandate, all that kind of stuff that happened last week. But we're now kind of coming down to the wire with that April 2nd deadline with reciprocal tariffs. How do you treat, like, as a trader, how do you approach the currency market or whatever trading market you're looking at right now? How do you approach that with a big looming deadline like that from Trump? Is there trades that you place based on that? Do you stay out of the way? How do you approach a time like that?
To be honest with you, I do two things. I do what happened last time we had such a situation on the pairs that I'm trading. So not only am I trading Aussie, but I'm also trading dollar, right? So of course it's a dollar trade and a dollar thing, but also with, for example, if you look at like randomly Euro New Zealand also had a reaction out of it. So it kept making Euro New Zealand going higher. So even though if I trade your dollar would be it going to the higher side, I will be cautious about selling Aussie dollar and New Zealand dollar against the US dollar. And I would know that's not a great thing for me. So I would hope and presume that wouldn't happen. So I would lower my risk lot size. I would do actual steps to reduce my risk until that risk is kind of gone or weaned out, meaning there is no more either risk for an increase in tariffs or if they just take them away in total. But what happened back in March, beginning of March, 4th of March, was that it increased. They kept giving each other new tariffs, and they kept finding new countries to give tariffs. And we have to have the same escalation for us to find the same moves again. Again, if I'm late to the party, there's always a pullback.
Sure. Yeah, no, I think, and that's, I guess, too, the trouble with this, or the trickiness with the tariff stuff, is the market's kind of telling you that a weaker dollar is the response to, uncertainty in tariffs, which I think is interesting. I could have seen a case where tariffs concerning inflation make the dollar go up. But what this is really telling us, Ivan, and I'm curious your thoughts on this, is actually that the concern is not inflation from tariffs, that the concern is growth. Because if the concern was inflation, the dollar probably would go up, right? If the idea is like, oh, this is going to be massive inflation turmoil and the Fed's never going to be able to cut rates now, the dollar would be, I think, higher. But instead, what the market is now telling you, which is what it also told you in 2018 when we saw tariffs, is that it's not a big, massive inflation fear per se. It's more so, and this seemed relevant to what Jerome Powell was saying last week, is it's more of a concern for growth than it is for inflation. I mean, it's potentially recessionary, especially for places like Canada and Mexico, who have large dependencies on the United States economy for their exporting stuff. If they get slapped with massive tariffs, there's a solid possibility those countries could go into recession, and that is it's like a sickness. It's contagious, right? Recession is contagious. So I don't know. I think here's my thought on it. I think that there might be some resolutions coming with the tariffs. I think that everybody knows how devastating they could be. And if there is resolution, I actually think that could actually be dollar bullish in a weird way.
Yeah, potentially. But I guess I was surprised by, because what I saw, or what I didn't see probably, is that tariffs in general is inflationary, because you take away a product and then whatever available product is left in the economy is at a higher price, generally speaking.
Right.
But what the market did instead, and said, since we're going to have so much removal of products, that's going to lead to recession, because people are going to go into go out of business. And I think that also talks a bit about how the market feels about how fragile we are as an economy. Yes, we have fallen down a bit from 9% inflation or so down to 2 or 3%, and that we might even drop down to, not down to 1%, but drop quite more. And then we are on the other side of the pendulum, where we are no longer only falling a bit, we are falling quite hard, because the rug pull that I would argue the tariffs did is going to have catastrophic consequences for certain businesses. And I guess what I underestimated was that the market believed that it was much more market-wide, and not as individual as I thought it would be, as to just businesses here and there instead of the entire society and the entire economy. Sorry.
It's challenging because the concept of tariffs, what you really get into is like, okay, first of all, we don't know how certain anything is with tariffs. Like they could be coming, they could also be resolved. I actually think, so when I say dollar, let me clarify what I said too about the dollar. I said, I think that resolutions could be bullish for the dollar. I think they're the bullish for the dollar if and only if the resolutions are tilted in favor of the United States. Here's why. If we see, negotiations happen where Canada, Mexico come and they basically yield something to Trump, it's going to set a precedent of U.S. dominance, right? That's what Trump wants. Trump wants to renegotiate and win out on trade relations with allies. That's his idea, right? So if that happens, the market is going to say, okay, so Trump's in the driver's seat. He can tell other countries what the trade relation is going to look like. If he can't, right? If there's not that scenario, if there's concession by the U.S., by Trump, and some stepping down, some backpedaling, the dollar could actually look weak as it tilts the strength into the favor of those who stand against Trump, right? The pushback on Trump.
The all-time highs, but I'm near for the year. I was at 195, kind of the peak. But what I'm kind of happy about and fairly proud of is we're still 6 to 7% away from the highs, and I am about 1% away, not even 1% away. I'm like 7 grand. So 7,000. I'm 0.2% away from my all-time highs for the year. And we still have, 6 to 7% to go. If we were going to sniff all-time highs again for the year, bring it on. That would be a pleasant surprise. In fact, it might be a good time for me to be invoicing clients if that's the case, because if we're up, 250 to 300 grand for the year, I think it's appropriate. I didn't have any invoicing through the election last year. We had a bunch of profits through Q4, and now kind of surviving Q1 is good. So we'll see. But what I'm preparing for is if we are heading into this 50% zone, that's a lot of support in here. I could see the bears making another case, or at least try to maybe claw back a little bit. But I think a lot of this is a relief rally. I think a lot of this is the quieting on the news front with tariffs. Look, price action like this, price is mostly the sentiment driver. I think the reason this became so extreme and felt so nasty was because sentiment tipped so bearish. But it's this is what the market has to price in. The market isn't just thinking tariffs. The market's thinking, well, if we have tariffs and we have higher inflation, what's the Fed going to do? And what about slower growth? And what about earnings compression? What about revisions? What about unemployment? All these things were getting priced in. Okay, this could get really, really bad. But labor's been steady. The Fed's been reassuring. The tariff talk is become a little bit softer, and the market's giving this kind of glimmer of hope. Which again, I think this is, look at your levels, and let's put a pin in this conversation and go out to 30 days from now. If 30 days from now we're still hanging out here, then there's just a lot of indecision. If 30 days from now we are sitting within a whisker of these all-time highs, then this tariff talk and this tariff tantrum was essentially over, and the market is still showing resiliency, and all is well, right? If this market is lower in the next 30 days, then we are probably in a bull rally in a bear market. And this is likely going to get worse, okay? But as I said, I don't think that Europe and China and everything that's performing so well right now that's non-US will continue to perform so well if the US is going to tip over into a bear market. If the US tips over in a bear market and we all of a sudden have bear market that shows recession, we've seen, if you're following macro analysts out there, their risks of recession have gone from 10 to 20 to 30 to 40%. I've seen as high as 60% risk recession. It doesn't mean anything. Look, even during recessions, the market's open. You're going to trade through it or you're not. So I'm going to trade through it. Whether this market is making all-time highs or making fresh lows, I'm going to trade through it. All right. But the point is, if we're looking at the technicals, this to me is where the bears can step back in and fight. It's coming in. It's coming in close. So this is why I'm using this opportunity to take so many profits and take so many trades off, because if we are going to see another flush lower, I don't want to be sitting here with positions that require a bullish direction. So the positions I've been nibbling at down here are now showing some profit. I'm taking those profits. A lot of them are, 50, 70, 90+% profit. So rather than hoping that I hold this all the way to expiration, I'm going to take the lesser profit instead of going for max profit. I'll take a little chunk of that, but a majority of the profit, and not have the risk. Okay. A while ago, you mentioned how you trade gap fills. I didn't actually mention that. I think that, all I've been looking at here for the last couple of weeks is this area is a gap fill from both sides, right? This is the election gap, but you can see that all the support in here even, and that would be a big window for the bears to then say, okay, look, bulls, that was a cute little rally. Now the bears can step back in. Here's why. And whatever news gets attached to it, we'll find out. But I would say watch your price action carefully here. This is now, I'd say the bullish gap from today is now a potential target for the bears. Right? So if we push up into this area here, pull back in that 5-0 zone, that's nice equilibrium going to this April 2nd tariff discussion. But the bears would be coming after this gap here and this gap here. So I'm not trading that right away, but I wouldn't be shocked to see if the bears do step up, that we go after a gap fill. If there's more momentum, they take out that 5,600 low, then that gap right down here to the previous lows we had, gap 1 gets tested, gap 2 gets tested, and we're no better off than where we started other than being back at the lows again. And that's what I'm saying. Like, this volatility situation could pick up and there's more ahead, but again, I'm thankful for a little bit of a relief rally. The technicals worked out pretty nicely. There's harmonic merge. Like, still got a little bit more upside to go, whether it's today, tomorrow. We'll see. Okay, quickly, let's go. I'm just going to be on here for just a few more minutes. Natural gas. Let me go back to the daily chart. So oil is moving off the lows just a little bit. That's fine. I don't have any trade in oil. I'm still long natural gas, and I'll maintain that long position on natural gas. Gold, nice little pullback on gold. As I expected, wanted to see. It's happening. We got now a couple days of some red, which is totally fine. Any type of 21 or 50 period moving average, honestly, that's not enough for me. I know that I say I want to start nibbling on gold if we have some pullback levels. We have central banks buying gold at a record pace, but I would say this 200 moving average is legitimately why I am not bullish on gold right now. I'm not bearish on gold. I don't know what this would have to do. For us to find this 200 moving average, we would probably have to see the U.S. would probably have to sell gold and cash in. If they did that, that would fluctuate gold pretty aggressively. That could be what causes there could be a myriad of reasons for why it would cause a decline in gold. But technically speaking, this level and this 200 moving average with this distance away, I'm just interested in buying dynamic support. I like positioning for longer term gold bullishness, but I think in the short term, that's why I shorted gold with a futures contract. So my gold futures trade is max profit about $120, and I'm actually somehow showing a profit of it's about 96%. Okay, I still have a profit trap. This is looking good. Probability of profit on this one's still pretty darn high. Let me go to the trade on this April 24th contract. What's my April 24th would be here. My bull call spread is the 80 by 85. My put would be it's an 8 delta, which is about a 91 and 92% chance it stays out of the money by the time that expiration rolls around. So I still like the trade. I think there's the high probability of an income trade. That's what I'm doing right there. So that's the trade I'm in. But I still have GLD, I still have PHYS, I still have CEF, I still have some silver and gold plays that are both looking pretty good. I want to add to both of those on pullbacks.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.